Hello, and welcome to Unlocking Cyber Insurance, Essential Steps for Protecting Your Business from Cyber Threats, Interpreting Changes in Cyber Insurance. Things to know. Livestorm begins all of our webinars with your sound on mute. If you can't hear us, click on the screen to turn on the sound. Your microphone will remain muted, but please use the chat to talk to us. And while you're there, drop us a note right now and tell us where you're dialing in from. If the alerts are too much, you can mute them by clicking on the bell on the right. You will automatically be getting a recording, but if you would like the presentation slides, please email me at virginia@criticalinsight.com. I'd like to introduce today's speakers. With me today, we have Brian Hurd. Brian currently serves as Chief of Office for Aon Cyber Solutions, where he leads many of the company's largest breaches and critical client efforts. He is a seasoned cybercrime, computer security, and homeland security professional with 30 years of helping clients in preventing, detecting, and responding to issues related to cybercrime and data breaches, information security program development, pen testing, digital forensics, intellectual property protection, and electronic discovery. Next, we have Mike Hamilton, who is the co-founder and CISO of Critical Insight. He's a former CISO for the city of Seattle. Frequently quoted in major media like the Wall Street Journal, New York Times, and SC Magazine, Mike is an in-demand speaker and educator leading our free monthly security awareness trainings. Mike also leads the nonprofit Pisces, which provides no-cost cyber monitoring for small local governments and uses collected data to train the next generation of cyber analysts at 20-plus U.S. colleges and universities. And last but not least is Fred Langston, who is the co-founder and chief product officer for Critical Insight. A pioneer in InfoSec with over 2 decades of experience, Fred was an author of the HIPAA Security Rule. With over 24 years of professional information security experience working for thousands of clients, he has created effective risk management strategies, enterprise security, and data protection programs. He's an in-demand subject matter expert and has been quoted by several of the nation's most trusted editorial news outlets. And if you can't tell, I'm originally from New York, and we speak rather quickly over there. So learn more about us at criticalinsight.com. Now over to you, Fred.
Sure. Quick description of why you're coming to see us, because we have expertise in this area. Critical Insight really focuses on preparing for incidents, making sure you've got your incident response plan and playbooks in order. You've done tabletops. You've actually answered a whole bunch of the questions that Brian and Mike and I are going to talk about today, because they should be answered before you're in the middle of an incident. Helping you understand when bad things are happening. So our MDR service, looking for evidence of bad guys on your network or in your data. And of course, responding by doing rapid quarantine of systems, having incident responders parachute in 24/7, and making sure that you've got the backup if you need to go to expert witness or court or something like that. Back to you.
Thank you, Fred. Off to you, Mike.
Okay, so welcome everybody. We thought this would be a good opportunity to touch base on some of the topics around insurance, and we've done insurance presentations before. Let's all remember how bumpy it has been getting through cyber insurance and all of the changes and all of the limitations and all of the refusals to honor a claim because the controls were not in place. You said were in place, and a whole lot of things have happened. But let's ground ourselves here because insurance is risk management. There's only 4 things you can do when you identify a risk: accept it, avoid it, mitigate it through the application of controls, or transfer it through insurance, and that's it. So Fred showed you our suite of services. Here's how they kind of plug into the risk management equation there. It's the likelihood of a bad thing happening multiplied by its impact. And so what is a bad thing happening is, we'll come back to this. Brian, you want to talk about Aon here?
I don't know if I like that lead in. What's a bad thing happening? Brian's listening. So, hello, my name's Brian Hurd. I work at Aon, also known for those of you in the community as Strauss Freeburg. I've been in the community about 30 years, founded the Navy's cyber counter-espionage program, and was Microsoft's chief of cybercrime intel. And we're here to talk to you today about a lot of things. This list is, I'll do 30 seconds on this, and then we're going to move on. Most people know Strauss Freeburg as an incident responder, and we work together with other great incident responders like Critical Insight and others throughout the community because we're all helping clients at different times in different ways. The rest of this list is the other things we also do. But even if you never call me again, this is a great executive cheat sheet. Somebody should be thinking about these topics, even if you're not talking to me. The other thing I'll show, and we'll call back to this later in the presentation, that blue box at the bottom. those are the partners that we've partnered with in the community for things like MDR and managed services and backups and things like that. This is in essence the underwriter's laboratory list of smoke detectors and sprinkler systems that we're seeing have a positive impact. And we're going to talk about how all that comes together with Mike's leadership and Fred's technical leadership about this in terms of the trends we're seeing across the globe and around the community. Back to you.
Okay. All right. So let's talk about risks, because transferring risk is not all cyber, right? I mean, that's what we're here to talk about. But, there's a finite risk that an asteroid will wipe us all out. But because it's the product of the likelihood of that happening and the impact, when we're talking about asteroid, that's actually literal. But the impact of that would be erasing humanity from Earth. That's a big impact. But the likelihood is so small, we're not all freaking out about that, right? So in a survey of CFOs, CISOs, risk managers, chief risk officers, this is what Aon has been tracking as the top risks to business for the last couple of years. And one important thing to point out here is that we maintain pole position 1 here. Everybody is calling cyber risk their biggest risk to business continuity. There's a lot of things on here. You can see on the right-hand side, the top 10 predicted to be in 2026. And you can see the arrows there, which ones have moved up in ranking, which ones have moved down in ranking, which ones have stayed basically where they are. Cyber risk is a risk. It is the one that's got people's attention right now, but there are really a lot of things that need to be involved when you're doing adequate risk management for your organization. Brian, you want to talk about this?
Yes, and one of the things about cyber risk, which many of you in insurance came on to talk about today, is it has to be put in context with the overall organizational mission, whether your mission is government, whether your mission is academia, or whether your mission is commercial. One interesting thing about it is you'll notice in 2026, workforce shortage shows up on the list, and liquidity risk, cash flow also show up. This together with the things you've been hearing about, environmental risks to businesses. That's the environment in which cyber has to not only thrive, but protect. So that tapestry of risks then puts into perspective where we're going to dive deep with Fred and Michael into what we're seeing in cyber.
Yeah, I wanted to see something I think is very interesting. In 2026, they have a business interruption dropping way down to 6 from number 2. Well, I wonder if that number 2 was the CrowdStrike event, which was the largest outage in IT history. Is that why it's number 2 in 2023? Probably not. I'm guessing that this data was collected probably before that. So I bet a lot of people would revise that 6 rating for business interruption after what we survived this year.
One thing I want to point out here too, see number 5, regulatory and legislative changes. That one I think is a bit of a wild card, because with the recent events around the EPA in particular in the water sector, where we had the overturning of the Chevron deference ruling by the Supreme Court, meaning that the regulatory agencies cannot interpret their own regulations in terms of enforcement. That one's a wild card. And I think number 5 there has an outsized impact on number 1. So I think that's something to watch.
And there's plenty of details within the report, but we wanted to give this context as we move forward in the discussion and really delve into the cyber components and things we can do today. But if you're a chief information security officer or any other type of role, and you're talking to the board about your risk, you should at least be aware of what risks are in the heads of all the other executives at the table. We hope this helps.
Okay, now back to what are the events we want to avoid? Because in our business, we have some of the worst secret handshake language on earth. We are unintelligible sometimes when we're talking. So it's a really good idea to remember what we are trying to avoid here. And it's not SQL injection or phishing. It's That's not it. It's unauthorized disclosure of protected records. We know that that costs somewhere between $200 and $300 a record to clean up. It's theft through business email compromise and a payment redirection. It's extortion through the use of ransomware, which we're talking a lot about today, but also through denial of service, also by stealing records and holding them in abeyance and saying, if you don't pay us, we're going to make all these records public, and that's going to be followed by a class action suit. That's a lot of leverage for the bad guys. Being used as that third party to compromise others and then just get knocked down for the sake of getting knocked down. Here's what we're really trying to ensure against, right? These are the bad business outcomes we're trying to avoid. So I wanted to make sure I took a little bit of time, as I always do, and pull our heads out of the cyber nonsense that seems to permeate our language these days. So the changing things. So number one, this is a real jaw dropper. 62% of businesses, and this is about a 2-day-old headline. 62% of businesses filed a cyber insurance claim last year. That tells you how pervasive this is, how unavoidable, how foreseeable one of these incidents is. And so, again, leaning into impact control, right? Minimizing the impact from these events after you've done everything you can to prevent, to reduce the likelihood, managing that impact. And that's why having managed detection and response, right, 24/7 SOC operation, helping you, that's what that's about. That's about impact management. And that is viewed very favorably by the insurance companies. Well, so here's some studies done by Marsh McLennan. And way back in 2022, there was $8.5 trillion lost to cybercrime globally. That makes it the third largest economy in the world, is what everybody was saying. Well, if that's going to go to 24 trillion by 2027, now we're talking about nation state level ability to make things happen, right? When somebody is that well resourced, that highly motivated, they can do a lot of things. And my concern continues to be, there's all these pockets of criminals all over the world. Well, the 5 crime families in New York did not become a formidable force until they aggregated under some kind of governance structure. Well, if all the criminals in the world, not even all of them, but if these pockets of criminals all over the world all of a sudden come under some centralized governance, we're not talking about losing hospitals. We're talking about countries getting knocked down. So this is a trend we don't like to see. They're making a lot of money. It's not all off ransomware. It's all kinds of things, but still, that's a lot of power in a group of criminal enterprises. And here's Munich talking about the growth of the insurance industry, the cyber insurance industry. It's going to double approximately by 2027. So those numbers are fighting with each other. The amount of losses and the increase in the number of insureds and the policy coverage there are fighting with each other for dominance here, is the way I see it. Brian, what's Aon say?
So one thing to add a little bit of context to Munich Re, a great company. So Aon sits as a broker as opposed to a carrier. Marsh is another great broker in the community. There are many. We sit as a fiduciary to the clients and place their insurance with insurers, with captives, with reinsurers like Munich Re. The part about that stat that's interesting, 5 years ago, nobody had cyber insurance. 5 years from now, nobody won't have cyber insurance. So, and it's being mandated not just individually, by the regulators, by the large companies. If you're the target's HVAC vendor of the future, you're going to have cyber insurance. And we'll talk about why in a couple of ways. It's not just about the money. What we've seen, though, is in this stats from our 9th edition of our Global Risk Management Survey, that not only is the breach cost going up, those who didn't have automation and incident response that responded well, if not in the dark of night with no human interaction, the fires were bigger. We also saw that 87% of people learned about the fire from somebody outside their house. That's not a good statistic when the criminal is your best reporting component. Or the FBI explains to you that your data is being sold in the dark web. And God bless them and CISA for doing so much, much more now than they did when I was founding some of the programs back in the early days. And what we're seeing is that this is hitting everyone at all levels of the market. And we'll talk about what you can do about it. The gloom and doom on these slides, Michael and Fred and I are now going to walk you through, okay, what can I do about it today, tomorrow, and next week?
Okay, this is alarming. It's a red line. It's going the wrong way. So somebody in the graphics department deserves a raise because I'm scared already. What does this mean, Brian?
So pegged to a 0 point of 2019, this is the instance of ransomware attacks and claims within the entire insurance industry. So what we saw was, that what we thought was a horrific set of mountains to the left there in the 2020, 2021 frame. Some enforcement actions. I used to run these at Microsoft with global law enforcement in the takedowns, and also the outbreak of basically unrest in Eastern Europe kind of put a damper a little bit on ransomware attackers, and they are back with a vengeance. We are seeing the first time the Bitcoin wallets of these evil people being tracked by Chainalysis over $1 billion. We're also seeing a bunch of other stats about attacks for business professional services. That translates to law firms and consulting groups, those entrusted with the secrets of others. Because it's not just about the encryption attack anymore, it's about data exfiltration and publication threats. We're also seeing attacks in manufacturing, construction, and healthcare. This trend, we're trying to stop it, and we'll talk about why, but it has an impact on the insurance market we'll talk about. Fred, over to you.
Yeah, I want to make sure everybody on this call, because I think most of you are not what you consider the big game, not Fortune 500 here. Do not discount the fact that because they're putting a lot of emphasis on the big targets, that means your risk is less. It is not. Most of the attacks are being run by automated systems that just go out and scan every IP on the internet. They find a vulnerability, they try to exploit it, then they maybe go and sell access or any number of things after that. But you got to make sure you understand that everybody is an equivalent target at this point, at least for initial access breaches. Everybody, you could be a two-person business and you will be attacked because the machine does not know you're a two-person business. You're just another target. Mike?
Yeah, the scanner will find you. When a vulnerability is announced and a patch is released, the race starts because bad guys are reverse engineering the patch and the scanner starts finding vulnerable systems. The scanner does not care how small you are. But I wanted to point out too, part of this signal, Brian, and I don't know if it's possible to deconvolve it. Part of this signal is due to the changing business model of the criminal enterprises and going to an affiliate model, ransomware as a service, so that the great population of unskilled people can now be criminals quite easily. And I don't know if it's possible to tease that out, but it seems to me that uptick is contemporaneous with the change to that model. Has anyone pointed that out? Is that right?
Well, there's a lot of forces within this. So I believe you to be quite accurate. I think what we've seen is this is not a ransomware attack. Is not an attack by one kid in a hoodie. Get that image out of our slides, get it out of your head, and tell your boards that's not what it is. This is an ecosystem of evil of hundreds of thousands, if not millions of people dedicated to scraping this money out of our hospitals, our churches, our governments, and using it to buy boats and planes and Learjets and whatever else they spend it on. And we need to track them down and bring them to justice. And Fred, to your point exactly, there is a size criminal for your part of the market. There are some of these groups that only hit SMBs. There are some of these groups that only hit hospitals because they know how they work. They specialize. And the group that finds the vulnerability sells the access on an open market to other groups that specialize. And the person that extorts you is not the person that calls to harass you. They outsource that too. It's all a marketplace. And it is, but there is a way to address it. We'll talk about the impact of this trend on the insurance premiums, and then on what you can do about it for root causes, regardless of your company's size.
Okay. So The pricing is going down, and there's a couple of reasons why. Um, I think one of those reasons is that there are, and this could be a momentary statistic. This doesn't necessarily mean it's going to hold, but there are fewer victims, but the extortion demands have gone up. That's one reason. There are fewer that are actually impacted, but the ones that are really, really hurt bad. But the other one is there's competition in the marketplace now, and there's some pretty interesting startups that we'll talk about here in a bit. I think also that we are getting better and better at understanding not necessarily the root causes, but the control deficits that lead to compromise. And after working with them for years and modifying, here's the information that the insurance company will need in order to price your risk, we're getting better and better and better at knowing which ones really need to be there to make the bad guy move along to the next victim, because you're going to be too much work. And, this greater understanding is allowing this risk to be priced more accurately, which means the insurance companies can still make money, won't be driven out of business by, insuring something that's, again, a foreseeable event. The market forces are coming, the rates are falling, all the businesses are improving their security. I think that's probably reflected in there as well. Brian, would you say that over time the responses have become better with the insurance questionnaires?
Yes, I will. I'll let Fred opine in, and then on the next slide or two, I'll talk about, as you've said, what that measuring stick looks like for the controls.
Yeah, I just wanted to comment on something that in this industry we have been hoping for a long time, and that's actual actuarial tables that are starting to talk about what average losses in different industries for different types of businesses of different sizes. This is kind of like the golden goose that we've yet to be able to build, because usually they're 100-year, 50-year, 200-year tables, right? If you know actuarial science. But there are some companies now that are starting to publish proto actuarial tables. We actually consume the output from one of those companies to help us in our risk assessment. So while they may not be good enough for insurance, there are some actuarial services out there that are starting to put some decent data together. So if you want to go out and find out what the average losses in your particular vertical is for your size company, that data is finally out there. So that's a real promising development.
I will, Fred, I will pin in, as we go to the next slide, I will pin in one observation, is that the insurance companies have the data on every incident. And we'll talk about that in a couple of minutes about the root causes. And we do have business impact assessment, even Monte Carlo simulations for every type of company size and vertical. Now, whether those are published out is another discussion. So your point about... I'd like to see that. I get that part. So that's my point about the actuarial tables for predicting the floodplains and everything for 50 years. They don't want to publish them out so that others might use them because they're not confident in the math, but they're using them internally. Mm-hmm. So the underwriters it is incredible to see inside Aon and all the other companies how this data is really being mined for effect. And that's what we'll talk about as we go through this in the next couple of slides. And I'll go right into those red bars are that red graph you saw on the big red line of ransomware. Now, what's following it, that wave that seems to respond to it, is the insurance premiums. And what we saw was a huge spate of attacks on the left-hand side, followed by the market hardening. They were paying out so many claims, they were losing money. And one insurance company, if you put out $1 in premium and you pay out 80, 90 cents or whatever in claims, you have a 10% profit on that book. That's not bad. If you collect $1 in premium and pay out $4 in claims, that's not good. You can't continue to be an insurance company because the law of big numbers is not working in your favor. It's not that for any other reason that they'll go out of business and they can't give anybody insurance if they're only insuring everything that catches on fire. And then what you've seen is, while we still have this huge spike in continuing attacks, The rates haven't hardened yet, but you see the trend there. They dropped quite a bit, but now they're kind of inching their way back up to zero. We'll talk about that is because more capacity came into the market. More money was given to the reinsurers and insurance companies at the global level. There are some also new plucky little startups coming in, but the market moving part usually is on the billions, not on the lower end.
Yeah, this is a real interesting graph showing this evolution with time, and it does look like it's going to be sinusoidal. I don't know if that allows us what's come to to predict what's coming, but it looks like it does.
Sinusoidal, Mike?
Yeah, sine wave.
There we go. Thank you.
Yeah.
Go ahead, Fred.
Okay. Yeah, I think one of the interesting things is there's going to be a new world of different kinds of discounts when you're looking at your cyber insurance. For example, some insurance companies, if you're consuming our services, they have a list of things and they go, are you consuming this service? Well, that's 5%. You're consuming this service, that's another 2%. So there is a new world too, where they're looking at what kinds of things that potentially you're outsourcing from reputable companies and giving you some discounts on those numbers.
Yeah, and I'll tie that off too, which and I didn't like when I saw this. I didn't think this was the right way to go about this, but there's been a lot of data collected about, okay, well, this thing happened to you. What technology did you have in place? Oh, you had a Palo Alto firewall, you had a Palo Alto firewall. And then they come out and say, well, people with Palo Alto firewalls are less likely to get whacked. And that is a correlation. That is not a causal relationship. And so there have been some far short of Monte Carlo modeling, attempts to do this and pin it on specific technologies. And I just thought that was all wrong.
So, and as we go into this root cause, what I'll say about, and I can't speak for every article in my community, no more than we can speak to all the crap cyber articles that occur too, is a lot of times the theory of that should be people with this type of smoke detector often get out of the house less burnt. Not that they're not having fires, magnitude. The claim is less, more people survive. And what all of that international trends in ransomware, billions of dollars of insurance payouts, and the collection of the very data you're talking about leads to this. The underwriters have a list of the top 12 things that would have stopped the spark or spread of a fire. Now, for those of you who are executives not in cyber, this is a list of seatbelts, airbags, crumple zones of your car, or the smoke detectors, sprinkler systems, radon detectors of your home. It is just the things that would have stopped you from dying. And number one is MFA, 2, endpoint protection, 3, backups, network segmentation, and patch management. And in that graph in the bottom right, those are the top 5 reasons you'll get declined insurance. If you crochet your own seatbelts, I'm not giving you car insurance either. And so this is a standard thing. It's as boring as the day is long. And this, I didn't rank the rest of them because number 7 or number 9 really doesn't matter. It's the top 5 and the rest of the list. This is your next best dollar to spend.
Yeah, and I'll point out that patch management is the trickiest one. That's what we were talking about when a patch is released and a vulnerability announced, and it's in a piece of technology that faces the internet. How you go about that kind of urgency in your patching is something everybody needs to look at. Fred?
Yeah. What I want to share is I know a lot of people here have gone through the process of getting cyber insurance. If you're a small company, they go through a relatively rigorous vetting process. But Brian has shared with us, if you're a large company, the vetting process that you go through. And for example, MFA, one place we always like to point out, well, where do you have MFA? Do you have it for remote access? Do you have it for administrative access? Do you have it for software as a service? There's like 7 or 8 places you should be applying MFA. And we found commonly people don't do a good job of getting it everywhere that it needs to be. But I can tell you from what Brian showed us, they're going to get a lot more rigorous in looking at finding out where you're having and applying these controls. It's not good enough to hold up your hand and say, yeah, I've got MFA. That's not going to be good enough. So for all of us who probably not been through that same rigor getting policies in the past, expect to get something like that in the future.
And the policies are written for an SMB has maybe, it used to be 20, 25, 30 questions. A Fortune 500 company has 200 questions on 7 forms. And when I placed insurance for an entire US state, we had 70 organizations filling out 300 questions each, rolled it all up into one package. So believe me, I don't know what forms you all may or may not have seen in your careers, but it's not a yes or no question. Are you physically fit? Yes. Give me life insurance. Doesn't work that way either. So it's the other thing I'll say as we go through this, and to the next slide, please, is that same dirty dozen list. Back one. Here's the same list on what's known as a kill chain, or you can consider it a floor plan. These red boxes, the same dirty dozen, are just the door locks, sprinkler systems, and fireproof safes, now called backup, and fire drills, now called tabletops, of cyber. It's, again, as boring as the day is long. Over to you, Michael.
Yeah, and some of these are really necessary. We did a tactics presentation a week ago, right? The typical things that the bad guys do, and there's really 3 big ones. The first one is credential abuse. So it's MFA, it's good password management, is use password vault. Don't store credentials in browsers because they'll get poached from an info stealer that you trip over. Second one is vulnerability management. So that's all the patch management and the updates. And then the last one is social engineering. And social engineering, after extensive conversation about this, really the only thing you can do is train your users. And as we all know, there will never be a firewall for gullibility. And so that, to me, is the weakest control in the whole kill chain, is training your users, because some folks don't get it. I say this with some authority, but I love this figure.
I just want to jump in and say a lot of people don't take advantage of the attack kill chain, and understanding to map your controls against the types of tactics and techniques that are listed there is a fantastic way to go about really looking at, compared to standards do you have, it's, am I doing something that's handling things in the weaponization and delivery phase, and what kind of controls do I need to handle those TTs, those tactics, techniques, and the approach that they're using, the TTPs, I should say, and procedures that they're using. So it's never a bad idea to break out the attack kill chain and look and see how much coverage you have for each one of the differing steps in the kill chain.
And I'll push back slightly, in love and respect with my co-briefer and great friend Michael, is I agree with you. The users are going to click on everything. Make the IT, make that not a problem. I'm going to get on my high horse a little because I'm part of the problem. I'm trying to be part of the solution. The users should not be link detectives. The users should not be looking at what domain it came from or what URL is in it. We should be protecting the users because there are IT solutions of EDR, MFA, and all these other compensating controls that users don't click. And my other bit on this, and I'll say this to every company represented on this call, users don't click because they're stupid. They click because they're tired and they're trying to get to their kid's soccer game, and they think this email is going to hurt the company if they don't reply to the CFO and change that banking information. And the CFO never told them they won't do it in email. These are people working long hours trying to help. We need to wrap better technologies around them, so when they're trying to get through that last 100 emails, they don't make a mistake. And if they do, it doesn't sink the ship.
And I will just I'll tie a bow on that with my favorite control, which will never be represented anywhere because no one will do it, and that is a policy that says all personal use will be on a personal device. because if you take away somebody's ability to, go to Bubba's email service on a work computer, a whole lot of the problem just goes right off a cliff. Right? I mean, people are using all kinds of personal services that we know are the introduction vectors for bait. And if you seal that off from work systems and say, okay, Facebook lives here, Gmail lives here, you've handled a lot of problem. And unfortunately, no one will do that. And I lament that. I know one person who's done it for Stormvale hospitals in Kansas. And their phishing incidence rate is 0. And that's why.
I'm going to jump back in here, Mike, with a question for you, Brian. Craig asks in our chat, do cyber insurance companies perform due diligence prior to insuring customers? If they do, how do they perform it?
So I will say yes on a couple levels. And we're going to talk about in the next slide or two, Michael's going to show you a couple exemplars. Within many of the insurance industry, external vuln scanning, sometimes internal pen testing, and other things may be part of a continuing insurance relationship. Many insurers, while they may not directly test you, do require you to have external pen testing done by an independent party, to have tabletops each year as part of your insurance requirements. Again, based on the size and shape of your company and your risk profile. The other thing I'll say about cyber insurance is underwriting a bakery or a paper mill or a casino or a bank. While the questions all start out the same, the underwriting process is not. No more than assessing the sprinkler systems of a personal residence or an apartment building are the same. So there's a lot of boring, very complex things in the insurance industry that aren't brought forward a bit, but it is a very complex process to underwrite two buildings next to each other completely differently. And we are talking about those internal testings, just like many of you may have the little Geico device in your car.
Yep.
And they can tell you how good a driver you are. Yes, that concept was not lost on the cyber insurance groups either.
Yeah, that's where we're going with this, right? And Brian, you probably have some examples of this. There are insurance companies that if you want life insurance, health insurance, and you agree to wear a Fitbit that talks back to the company, they understand how much sleep you get, how much exercise you get, and they price your risk that way. That's where we're going with this. Okay, you want to talk about category scores? Yes, I think this is interesting, but I can't explain it.
Yes. So the logical version of this is you spend a lot of time and energy to fill out your cyber insurance questionnaire. One of the things our company's done, and others in the community, I'll speak as a representative of the entire industry, we actually give you scores back based on how you answered or didn't answer the questions. This is an example of those. The 9 colored areas are basically the same core areas of NIST and ISO, and the black areas under each of them, there are 35 of them, I'll call them chess pieces in a second, they are the supporting categories. So let's take a look at access control, top column, middle. Under that, you have access management, password configuration, and two-factor authentication. So those are the 3 supporting things that roll up to your access management controls. Now, this is a universal form in the insurance industry that allows our company to broker to hundreds of companies or hundreds of insurers, carriers in the US, London, and Bermuda. Now, the only thing worse than having one form that everybody hates was the 35 forms we used to have that everybody also hated. We give you this score back so you can figure out the secret credit score the underwriters are calculating about you, without you. And that column next to it, we tell you what your peer group looks like. If you're a hospital, if you're a car maker, if you're a casino. And we use those actually somewhat, and I like that proto tables, or the very slimy beginning of feedback, where we're reflecting averages at this point overall of an industry. Soon they'll be differentiated as the actuaries get more comfortable with the data for companies of certain sizes, under $1 million, $1 million to $100 million, $100 million to $500 million, and $1 billion and above. Those kind of scores will come back into this process, but you get this benefit for filling out your insurance forms. You get a scorecard. Mike, over to you.
Yeah, it's as we've evolved through this, originally all of the questionnaires you would answer, and they would take you at your word. And I don't think anybody's taking it at your word anymore. You want to see artifacts, you want to see demonstration, and I don't think it gets as deep as an audit, right? So we just went through our our SOC 2 SSAE 18 audit, and that's a little invasive. I don't know if it's ever going to get to that point, but I know that the requirements are more and more than just your word on something. And again, I think we're going to full-time measurements.
To that point, Mike, I think that fits well with the question from our audience. One of our contributors just said, why would cyber insurers differ in underwriting customers based on their industry sector? Sorry, actually, I jumped questions. Excuse me. Let's go back to the first one. I feel like once my agency got cyber insurance, executives are no longer willing to put more money into cyber operations at all. How can I get them to understand that cyber insurance isn't the end all? I feel like there's a technology.
So I'll answer both those questions simultaneously. And then hand it back to Michael, who is bringing up a very good point as well. Okay, so once you get insurance on your home, doesn't mean you don't replace the batteries in your smoke detectors. Also, for those of you that grew up, there weren't radon detectors when you had dirt floor. That was a new type of control, and if you wanted better insurance rates, you would then install those, or the carbon monoxide detectors that came all the rage quite recently. So if you do nothing year over year, your score will go down, your rates will go up, because the field gets longer each year. We put in more controls, more lessons learned. And the fictitious example I'll give you is a homeowner's policy. Year 1, there's no questions about deep fat frying turkeys. Year 2, we added a question. Are you going to deep fat fry a turkey in your kitchen? Everybody started to say no. Year 3, we asked, are you going to do it in the living room? Year 4, do you have an attached carport? Year 5, the she shed out back, eh? And year 6, it became a regulation. You're not allowed to deep fat fry turkeys within 200 yards of a building, outbuilding, or whatever. If you want to know what the regulation of NIST is going to be 3 years from now, read the underwriter's questions this year. Each new question should have you asking, what's my answer to that? Because it's the newest reason for $100 million in claims. We put a new question on the form. And if we put a new form like the ransomware supplement or others, that's like adding a chapter to the Bible 2,000 years later. Something really bad happened where you have a ransomware supplemental, a privacy supplemental, a vendor supplemental, operational technology supplementals to the insurance forms. So just those documents tell you what's going on in the world.
Yeah.
Over to you.
I will add that if your strategy is just to say, we're just going to buy insurance, once something happens, that is going to be viewed very unfavorably, not only by an insurance company that is insuring you because you have no controls in place and you just wanted to transfer all of your risk and not mitigate any of it, avoid any of it, or accept any of it that you could. Not only the insurance company, but regulators and things like the Federal Trade Commission. All right. If you express to your constituents, your market, your customers, that you are concerned about the privacy of their records and you take security very seriously, and it's found out later that all you did was buy a bunch of insurance, then the Federal Trade Commission is coming for you for the False Claims Act. So,
okay, Fred, I'm going to
be careful with that.
Fred, I know you have your hand up, but I need to jump on this one just for a split second. Anybody who thinks that has never actually gone to get insurance. It doesn't work that way. If you're like, I'm not going to buy smoke detectors, I'm just going to go get insurance. The first question is, did you buy smoke detectors? Like, I understand people say that all the time as CISOs. Those people have never looked at an insurance form. Transferring risk without doing anything is actually not an option. You will not get insured. If the first question an insurer asks on the phone call, do you have MFA everywhere, every time? And if you answer no, they just hang up the phone. They don't even ask the rest of the questions. They would just like pass and then you're done. Well, I'm going to get it in place. Yeah, let us know when you do. We'll give you insurance. Until then, you're not getting any. There's such a misperception. But over to Fred, because I jumped in front of him, but it's not an option. You'll have the highest rates, the biggest carve-outs, the worst copays. It doesn't work that way.
All I really want to get across is we see that this is an existential threat to businesses. It doesn't matter if you have cyber insurance, if your business is gone. I mean, that doesn't make sense at all, right? I mean, this puts businesses out of business, right? And I also want to point out, every place you see red on this chart, that is dollars coming out of your pocket to pay for a higher premium that you should be better off spending that money on controls. Now you're more secure and you have a lower cost of your insurance. That's win-win. So that argument your executives are using really is kind of bankrupt.
And the other final part to that for the individuals who think about this, even if you're never going to get insurance, go fill out the form, because guess what? You're the insurance company. It's your bank account. If I don't give you insurance, the questions are 3 times as important to you if you don't have insurance. Because if you can answer them, I'll give you insurance. If you can't answer them, you're the insurance company.
So Brian, I'm going to jump in with the other question.
Wait. One more thing for me. If you have no controls in place and you have insurance, look at the wording in the class action suits that have happened after unauthorized disclosure of records and publishing of all that privacy information. They're being sued because they did not have adequate controls in place to protect the data with which we entrusted that business. Here comes the class action suit. So there's a whole bunch of reasons why somebody should not just buy insurance. Virginia?
Thank you, Mike. Brian, back to you with a question. So why would cyber insurers differ in underwriting customers based on their industry sector? To attackers, IP addresses are ubiquitous to attackers and are as much as an access point to their objectives as they are the target victim. Sorry.
Yeah. So the question is, and again, I say this, great question and a great thing to differentiate on. Doors are ubiquitous on buildings, but when I break into one, if I'm breaking into a bank or a hospital or a morgue or any other facility, what happens on the inside, what I'm able to do for damage, what the cost of that damage is, what the impact on that provider or their customers. And there are many, many examples. If I hit an airline, I could stop air traffic for that airline for a great deal of time. If I hit a hospital, people may die. If I hit a manufacturer, things might be delayed. So there's the underwriting process, as different as it is for anything, homeowners, property, or cyber. Yes, the threat of having internet facing is the same to the attacker. But once they're in, the damages, the structures, not every network looks the same. You have a completely different network for a hospital than a manufacturer with a bunch of machines on the floor. So underwriting is a very, very specific process. The final thing I'll say, and we'll get to, I'm sure, the next slide, is there's 2 types of insurance you don't want to use this year: cyber and life insurance. You don't want to leverage either of those policies this year. Please try not to. Do all the things you need to do.
Okay. That was a little close to home there. Moving on.
Do more sit-ups, get MFA in place. There you go.
Okay. All right. So we talked a little bit about this, more of a data-driven approach that's being taken. And so there's varying grades. There's a spectrum of this. On the very progressive end of the spectrum, there are companies, startups, that are actually combining. We want to monitor you in real time so that we can price your risk. We need to know what your controls are. We need to know what vulnerabilities pop up. What is your rate of being able to update those and patch those? And they know very well what kind of risk you are. And then there's kind of the shall we say, the shallow end of the gene pool, where they'll basically scan your perimeter, give you a letter score, and call it good, having no context as to what they just scanned. Your web server that is disjoint from your network in a data center somewhere else that has no personal, no customer, no financial, no data of value on it, and still you get this score where the likelihood that you're going to lose anything is 0. So some measurements, yes, are more meaningful than others, yet everybody looks at, this security scorecard as, well, that just tells me everything I need to know about that company. It may be of some value in your third-party risk management because it does give you an indication of with what velocity they get things patched, but there is so much more to it, right? Yeah, okay, they get their website patched up quick, but have they done any background checks on their people? Things like that. So this is evolving. And I predicted this some time ago. We talked about the Fitbit and the device in your car. This is where this industry is going as well. If they can have real-time measurements, or at least frequent measurements, they can price your risk, or the risk of you as a customer and insured, a lot more accurately.
So a couple of things on this is many of those inputs aren't taken in totality. They're just, if you can't fix the outside of your house, I'm not too confident on the maintenance you're doing on the inside of your house. And they're just inputs into what is, again, many don't see, a very complex process evaluating a client. The other thing about the kind of mid-year and the constant monitoring, yes and no. There's a benefit to it, and we talked about this in the preamble of the call, but if I insure you for a year, I've looked at your controls and you have insurance for a year. If things change during that year, either I need to come back or I just need to accept that risk. So the constant monitoring is almost getting into prevention, which, by the way, loss control is something insurance industries are really great at helping with. So there's a benefit there. But the way insurance works is after we give you your life insurance, unless you've materially lied on the form, you get to keep it for a while. Or something occurs where it shows you didn't really do the right things. So there's a couple questions about war exclusions and stuff. In the interest of time, I only have about 9 minutes left. What I'll say is the war exclusion language has kind of calmed down. So there is discussion about acts of war like the Maersk attack or the Sony attack and these catastrophic events. What you should have on your side is a broker like an Aon or others interpreting those for you. The other one that's come up, by the way, just the same, major cloud outage is now potentially also an exclusion in some policies. Be very cognizant of the fact if a major cloud provider, Microsoft, and I was Microsoft's chief of cybercrime, so I'm not saying anything about the company one way or another, Amazon, Google, or whatever, or CrowdStrike, if there's a major cloud outage, it may also be accepted because accepted from the policy, depending on how the policy is written. For those of you who are homeowners, I never looked at my homeowner's policy until I saw water in my basement one time. Then I really read my homeowner's policy. So I would recommend not waiting for the flood to figure out what your flood insurance is, or a cyber event to figure out what your cyber insurance is. Make sure you know it when you sign it.
Yep. And I just think the juxtaposition of these articles just tells you that this is not a solved problem here, right? Here's somebody saying that insurers and brokers expect the market to close these huge insurance gaps, and we're talking about a catastrophic event, which is completely possible. A catastrophic event is completely possible. We saw how SolarWinds jumped the fence, the not attack. Remember that was crippling globally. Here's key cyber insurance stakeholders urge the government to help close that hole in uncovered risk. And then somebody else in the Financial Times saying governments should not be the cyber insurers of last resort. Well, the fact of the matter is there is a program called TRIP, the Terrorism Reinsurance Program. And for something that's sufficiently catastrophic that an insurance company could not have foreseen, they shouldn't be the ones to bear that cost, right? If somebody flies a plane into a building, the insurance company doesn't cover that. It's bigger than that. And so when we're talking about catastrophic events, to me, there has to be government backing there. Okay, this is it. This is our last slide. To pay or not to pay. I just thought this would be a good thing to land on because this is a topic of conversation that's never going to go away. I've seen policies starting to come out of state governments saying, Florida in particular, we just won't pay. Did that lessen the likelihood that they would get hit with ransomware? Not that I can tell. But, generally your insurance company policy on line one will say, if something happens, call us first. And there are examples recently, Columbus, Ohio, of organizations that got hit with ransomware did not do that. And they are paying a mighty price for that right now. Does the insurance company really think through this as only a business decision? And are we going to get out cheaper with rebuild? Are we going to get out cheaper by paying a ransom? Is there a policy we have to follow? I mean, what is that like?
Well, one, notification of your insurance company of a car accident, a heart attack, or other things in a reasonable amount of time is always a requirement. So that part of it, you have to notify your insurance company and the fire department, the incident responder, a panel provider from your insurance company, most likely. Same with their breach counsel and others. So all of those things, again, your incident response plan is not just a technical document, it's a legal document. Who do I call legally? Who's my outside counsel, et cetera. In terms of your coverages and whether it covers ransom or not, again, read your form. And then two, the decision to pay a ransom is often based on two parts. Encryption. Do you have backups that the adversary didn't get to? And if the adversary got to them, you don't have backups that have a different set of credentials or are immutable or were off-site or all of the above. And two, if you're paying for decryption, then you have to pay for a key and you have to decrypt your stuff, or are you paying for them not to publish your stolen data? But you're still going to have to tell the regulator about the stolen data anyway. So you're not paying them for confidentiality because you're going to have to tell everybody you had this problem. You're going to have to notify everybody. So the rebuild process, in my personal opinion, is quicker from your backups or scratch than it is from decryption. And it's a lot cheaper. You're not paying a bunch of us to decrypt your stuff. If you can get out of it without having to go through decryption, if you have good backups, that's your best path out. If you don't, you're not going to pay because you want to pay. You're going to pay because your business won't exist, as Fred said earlier.
Yeah. Yeah. And, there's increasing pressure from the Office of Foreign Asset Control about cryptocurrency exchanges that you may not use. And so the bad guys are dancing around all over the place trying to come up with payment systems that can be used and not have a victim run afoul of United States policy. Well, anyway, we could spend a lot of time on this.
Yeah. That's one of the 30 seconds or less. One of the roles in your incident response group is the ransomware negotiator. They have to do all the OFAC checks anyway. Now, if you hit an OFAC, the insurance company can't cover your claim. The negotiation vendor can't pay your claim. Guess what? You're just being extorted. It hasn't changed. It's just you're being extorted directly. So you either pay or cease to exist and maybe have an OFAC violation on top of a ransomware attack. That's all going to be things you talk about with your outside counsel.
And in your 8K filing.
Yes.
Okay.
And for the rest of your career. Yep.
Yep. So I think we hit all the questions. Did we get all the questions, Virginia?
Not all of them.
Not all of them?
So quick for Gary, he was asking, how do you put leverage onto a third party or fourth party who is not providing MFA capabilities to their application? And he mentioned in particular an EMR application. Well, you're fourth party, you're really in a world of hurt, right? You only have contractual capabilities really to play ball in that case. If it's third party, you can lean into, hey, my insurer is requiring it. I don't have a choice. I have a choice between you or my insurer. And the other part with the EMR, if the EMR is hosted internally, you could put access control that has multi-factor authentication in front of it. If it's a cloud app, you may be able to use a CASB, depending on which EMR and what capabilities they have to kind of control access to that. But if they don't, then you are literally stuck with negotiations.
So a couple things is, one, you can change technologies or third-party providers. Two, you can segment them. And then three, somebody made a joke about the killing a burglar and ending up in jail anywhere in the OFAC violation. Remember, regulators are prosecutors. They're not looking for good people that got put in a hurt locker and became a victim. They're looking for people who weren't running good businesses and tried to bury bodies and tried to do bad things. So without being too kind to regulators, they're not going to try and take, a small plucky company that just got put in a hurt locker and extorted up on trial. They want somebody who's evil first. So I'm not a lawyer. I'm not your lawyer. But there's more nuance to it. But again, those are the things which you should talk out in your executive tabletops long before you're there.
Yeah. Okay, we better wrap, folks. Virginia?
Thank you, everybody, for coming today. We are so happy that you did, but we'd like you to stay connected. So if you would like to sign up for our daily IT security news blast, it is curated by Mike Hamilton and has been for the last 15 years. You can actually visit it on our website. The next thing is we have free monthly security awareness trainings online. I've dropped a link for the next one that's coming up here on the 27th. We also have regular online webinars. And if you haven't subscribed, please make sure that you do. You can drop me an email at virginia@criticalinsight.com. We'll be sure to get you on the list. And please learn about our nonprofit partner, Pisces, at piscesinternational.org. And lastly, I have dropped two different things here in the chat for you. One is my email address. So if you would like a copy of the slides, please send me an email. I'd be happy to send them off off to you. And also, please take our survey. We'd really like to hear from you about how we did today. And with that, thank you so much for joining us. And final thoughts. Mike, I'm going to start with you.
Final thoughts are that things are still changing, but I think they are starting to stabilize in terms of what's required of you, expectations of insurance companies, and how this fits into overall risk management.
Fred?
Yep. Classic statement. You can either transfer risk, which is insurance, you can mitigate risk, or you can accept risk. So make sure you're doing something with every risk you have. You have a disposition in one of those buckets.
Brian, wrap us up.
My thanks to Critical Insight, to Michael, to Fred, and especially to Virginia, she who must be obeyed, and all of you for taking time out of your day. But what I'll say is, don't get your sound bites from the headlines. Talk to your insurance agents, talk to your broker, get real information about risk management, and I think you'll have a better year. Good luck and God bless.
Thank you, everyone. Have a great day. Take care. Bye-bye.
Thank you.
Thanks, everybody.